And we're back with Forum Daily's market update. Compliments of Catherine Murray, host of the Buck Stops here. Take it away.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing markets somewhat mixed today. The Dow is higher, the TSX a little bit lower, but this, of course, follows some significant rallies yesterday. Those U.S. markets all up by about 1% or so, with some of the hardest hit areas really outperforming. So think some of the smaller regional banks and also small cap companies. And of course, tech continues to get a lot of attention from investors. Large cap tech continues to be bought by the market. Away from that, we're also seeing the US dollar stronger versus the Canadian dollar. WTI is pulling back a little bit today, but we've seen some recent strength in WTI as of late. Away from that, there's a couple of big themes that continue to dominate the narrative when we think about investing and putting money to work. And I would say that the markets have been incredibly resilient, probably more so than people were expecting, just given the concerns regarding the debt ceiling, concerns regarding the regional bank system, and also valuations are still at historic highs versus the norm around 2022 times. So some would say that there's still quite a bit of downside, but stepping back, just kind of looking at some of these pieces and parts of the market, there is still the view that the Fed will, in fact, pause as it relates to raising rates and potentially even cut in the latter half of 2023. That is what the market is anticipating. However, the U.S. Federal Reserve continues to have hawkish comments. And in fact, the Dallas Fed president was out just this week saying that the current data does not justify skipping a rate hike. And we've also seen some of the economic data, to his point, coming in stronger than expected. The initial jobless claims this morning were better than expected, so less than expected. And then also, of course, the Philly Fed index came in better than expected as well. So it's still a bit of a wait and see in terms of what the market believes the Fed will or will not do, which is pausing in terms of hiking rates because we are seeing inflation coming down, versus what the Fed continues to comment on, which is that they really want to make sure that inflation does come down. Even though it has, they want to make sure it really does and stays there, because there is a concern that wages are going to increase. The wage pricing will continue to increase. And the issue with that is that wage increases are sticky. So in other words, you would in fact have higher for longer inflation if you see wage increases. So that's the big debate here. I actually had a great interview that I just filmed, which will air this Sunday as it relates to that wage question. I highly recommend listening to it because it's a different take in terms of what we're talking about today. Away from that, of course, other market themes, earnings are coming in better than feared, but it's not really pushing the stock prices much higher. But nonetheless, it is certainly better than feared, and that's also been supportive of the market movements, keeping the market in a tight trading range. In fact, that's really what we're seeing. Markets have been in a tight trading range. Morgan Stanley is out saying that they believe that will continue, that the range is about 3,800 to 4,200 on the S&P 500. Away from that, a big area of focus right now is what we're seeing from the retailers reporting their most recent results. Keep in mind, they have a January year end, so we're just getting their results coming in now. Walmart in focus today. They had a much better than expected quarter. Same store sales, so their comps were up over 7%, 7.4% to be exact. That's a big number for such a large retailer, and also in this current environment where we're concerned about the consumer. The drivers, though, of that strong sales number were, in fact, groceries, as well as some of the health and wellness areas within their stores. We also heard from Bath and Body Works. That stock is up by about 8%. They had earnings coming in better than expected, and their guidance was also reaffirmed. So positive there as it relates to the retail. Canada Goose, they actually had a better than expected fourth quarter results as well, but that stock is trading lower. And here in Canada, as I mentioned, the TSX trading slightly lower today. CPI is something to keep your eye on. It did accelerate in April. We got those results this week, coming in at 4.4% year over year versus 4.1%. So just be aware of that. Consensus does believe that the Bank of Canada will stay on hold, will not raise rates in June or July. But let's keep our eyes out for if that will be the case. Ritchie Brothers got an upgrade over at Scotia, helping that stock up by about 4% today. And keep in mind the BOC, the Bank of Canada, did have a financial systems review out this week where they are concerned about household debt and also financial flexibility. Lastly, we're all keeping our eyes, of course, on the fires, but also WestJet canceling flights just in preparation for a work stoppage. Nima, I'll leave it there. Back to you.